Thing. Fundamental is changing in the US economy right now, and most people won't realize it until it directly hits their paycheck, their savings, or their retirement. What worked for decades is quietly breaking down, and the old rules that Americans trusted for stability are no longer guaranteed. This isn't about a temporary slowdown or a short recession. This is a deeper shift that is reshaping how money moves, how wealth is built, and how financial security actually works in America. If you're over 40, especially if you're planning for retirement, these changes matter more than ever, because ignoring them could cost you years of progress and thousands of dollars. For a long time, the US economy followed a predictable pattern: work, save consistently, invest patiently, and retire comfortably. Interest rates rewarded savers, inflation stayed manageable, and the dollar was strong enough that long-term planning made sense. But that structure is changing. Today, Americans are facing higher prices that don't come back down, interest rates that swing unpredictably, and government decisions that directly affect everyday financial stability. The system hasn't collapsed, but it has evolved into something very different from what many people prepared for. One of the biggest fundamental changes is how inflation behaves. In the past, inflation spikes were treated like temporary problems. The Federal Reserve would step in, adjust rates, and stability would return. Now, inflation has become structural. It's built into housing costs, healthcare, insurance, energy, and food. Even when inflation numbers slow down, prices don't return to old levels. This means your money quietly loses purchasing power every single year, even if your income rises. For anyone relying on savings, pensions, or fixed income in retirement, this shift changes everything. Another major change is the role of interest rates. For over a decade, Americans lived in a low-rate world. Borrowing was cheap, asset prices rose, and debt felt manageable. Now rates are higher, and more importantly, they're volatile. This affects mortgages, credit cards, business investment, and government debt at the same time. Higher rates help control inflation, but they also slow growth and increase pressure on households already stretched thin. The idea that rates would always come back down quickly is no longer a safe assumption. At the same time, government debt has reached levels that were once unthinkable. Trillions of dollars are borrowed not just for emergencies, but to keep the system running. Servicing that debt requires higher taxes, more borrowing, or inflation that quietly reduces its real value. None of these options are painless for everyday Americans. This is why financial planning today must account for policy risk, not just market risk. Decisions made in Washington now reach directly into household budgets. Before we go further, if content like this helps you see the bigger picture and protect your financial future, take a moment to like this video and subscribe to the channel. On finance and global economy, we focus on explaining real economic shifts in simple language so you can make smarter decisions without the noise or hype. Another fundamental change is how work itself fits into the economy. Traditional career paths are less stable, and job security doesn't mean what it used to. Technology, automation, and global competition have reshaped entire industries. Many people are working longer, not by choice, but by necessity. Retirement is no longer a clear finish line. It's becoming a transition that requires flexibility, multiple income sources, and careful planning. Relying on a single employer pension or Social Security alone is no longer enough for most households. The housing market is also part of this shift. For decades, home ownership was a reliable wealth-building tool. Prices rose steadily, mortgages were affordable, and equity grew over time. Today, housing affordability is under pressure from higher rates and limited supply. This creates inequality between those who already own property and those who don't. It also means housing decisions now carry more risk and require more careful timing than before. Global dynamics play a role too. The US economy is no longer operating in isolation. Supply chains, energy markets, and geopolitical tensions influence prices and growth at home. Events thousands of miles away can affect inflation, interest rates, and investment returns. This interconnected world makes the economy more complex and less predictable, especially for long-term planning. All of these changes point to one critical truth. The strategies that worked in the past may not protect you in the future. Saving, alone is not enough. Investing without understanding risk is dangerous. And ignoring taxes, inflation, and policy decisions can quietly erode your wealth. The new economic reality rewards awareness, flexibility, and proactive planning. This doesn't mean the future is negative. It means it's different. Those who adapt can still build security and even opportunity. But adaptation requires understanding what's changing and why. It means focusing on real returns instead of headline numbers. It means diversifying income, not just investments. And it means planning for uncertainty instead of assuming stability. As we move forward, the most valuable skill isn't predicting the economy perfectly. It's building resilience. VET means having strategies that can survive inflation, rate changes, and policy shifts. It means staying informed without being overwhelmed. And it means making decisions based on reality, not outdated assumptions. If you've watched this far, you're already doing something most people don't. You're paying attention. That alone gives you an advantage. Near the end of this video, I'd love to hear your thoughts. Do you feel these economic changes in your daily life? Leave a comment below and share this video with someone who needs to understand what's really happening beneath the headlines. This channel exists to help you navigate these shifts with clarity and confidence. On finance and global economy, we break down complex changes into practical insights. So you're not reacting late, but preparing early. If this video helped you see the US economy differently, don't forget to share it, join the conversation in the comments, and stay connected for future updates that can help protect your financial future.